Hey, everybody. Welcome. So I'm the underdressed one today, but I'm wearing an American t-shirt because I think that's important, regardless of what side of the aisle you're on. Let's get stuff done. Thank you to all your business owners out there who are actually getting stuff done compared to Congress, which is not, at least not now. But there will be some extra bonus points for anybody paying attention today. If they can guess Jack Santaniello's background and what scene or what show that is from. So there will be extra bonus points when we get to that point. So just as a reminder, please hit the Q&A if you've got questions, in spite of the fact that we don't have anything really new to talk about. I guess we've got things that we can conjecture about, but nonetheless, and if you would use the chat to just harass and harangue us. And Adam looks fantastic. He's got a collared shirt on, looks fantastic. So Adam, you want to kick us off and then with anything that you've got? And then I do have a very lengthy email that we got from Corinne last night that will go into not all the detail of this, but we will address it. And I told her we would address it early on in this webinar. So Adam, thoughts?
Yeah, I'm gonna save myself for the FAQ and give Jack ample time to prepare around the bipartisan proposals that are currently flying around, because I know he's read them and he knows that I haven't. So anywho, I think, the couple things that I'll touch on, that seem positive, one is President Trump encouraging Republicans to aim higher than the skinny bill. That seems like a positive sign. Pelosi, not recessing the House seems like a positive sign in terms of a deal potentially getting done. The question that I did get asked a lot this week was because, a lot of this week I've been doing third quarter check-ins with people, and invariably, disposition of PPP funds comes up, and everybody's asking about taxability. So I'll hit a couple things that I've touched on in taxability, and Jack has always fact-checked me if I got something wrong or there is some proposed legislation around there. But right now, Treasury Department still holding fast on you can't deduct the expenses. The loan is an income, but you can't deduct the expenses, which effectively makes the money taxable income. Obviously, you can't find too many people that agree with this position, including the AICPA, which is our trade lobby, as well as both sides of the House, which have encouraged it, or both sides of the aisle, which have encouraged a different interpretation of this regulation. Independent of that, there's all sorts of articles out there from business magazines saying that they're either encouraging or just restating that businesses are really taking a wait and see attitude associated with applying for forgiveness. So I'm sure at some point the Treasury is going to come out with, or SBA is going to come out with, well, of the applications that we processed, this is how many that we've forgiven thus far. And I think we're probably going to be underwhelmed because if you just look at BGW as a proxy, we've only had a handful of people that have gone through the forgiveness process so far. And there's only a handful of banks that are actually saying, bring it on. Most banks are saying, hey, we're still, we're still waiting to see ourselves. So I think that wait and see attitude is driven primarily around more guidance. I agree with the wait for more guidance, but equally as important, I agree on waiting for tax purposes, because if you're forgiven in calendar year 2020, it's 2020 taxable income. If you're forgiven in calendar year 2021, it's 21 taxable income. Now, I did get asked by a client, he shall not be named, but his controller may be on this call. Well, have you found any authoritative source saying that that's okay? The answer is no. Other than you don't recognize forgiveness of debt income until it is forgiven. So in this case, the Treasury would have to definitively come out and say that it is taxable income, even if the money hasn't been forgiven, which would be contra to every other authoritative tax source out there that deals with loan proceeds. So, that's a long way of saying, is there any authoritative source that says that you can defer this into 2021? No, there's not, other than the overwhelming body of literature that's out there that says you can defer it. Now, what he did get me on is that I don't hear a lot of other tax professionals talking about this. So I'd be curious to see if, Jack, if this is something you guys have talked internally about at Shoemaker, but I don't know why you wouldn't defer it. And I don't know why more tax professionals aren't talking about deferring it, because if you defer it, you're writing the check in April 2022 versus April 2021. And secondly, even if they do, this sort of gets into prognostication of the timeline. Even if they do ultimately arrive at, hey, let's go ahead and fix this and give you the ability to deduct the expenses, your windows of time are, this legislation that's going to be pending. Okay, well, optimistically, let's assume that passes, what are we at, September 17th today, Gary? Let's assume optimistically that passes by the end of September. The chances, and the tax piece is not in it. Given that assumption, if anybody on this call believes that legislatively something else will happen after that, associated with taxation specifically, or Secretary Munchin, who doesn't know whether or not he's even going to be in the frickin' job or not, nor the head of the IRS after the election, if you believe that any of them will suddenly take action between the end of September, when legislation is potentially passed the end of the year, that's great. I do not think that's going to happen. I think the more realistic scenario is get past election, and as part of a piece of legislation, they will take up making a technical fix if they are unsuccessful in getting the Treasury to take a different interpretation. So I'm just looking at the realistic timeline that, I give it better than 50-50. You're not going to see a disposition of this question until sometime in the middle of 2021. Thus, even if it's not resolved, you're writing a check April 2020 if you recognize it, April 2021 if you recognize it in 2020. Whereas, as if it's still debt as of the end of 2020, you still don't know the answer. So hence the check would be written in the subsequent year. So I don't know. That's why I believe in deferral. The second thing that I'll talk about, Jack, I've given you plenty of time to stall to look at that legislation, by the way. The second thing that I'll talk about, because we've also had some calls about, hey, what do we do with the loan proceeds, or what do we do with the extra cash? Given that, we deployed all the money, but we didn't have as much of a disruption right now as we thought. My general advice has been, all right, well, think about it for right now as it was an equity injection. What would you typically do with an equity injection? Usually the answer is not take chips off the table. In this scenario, it's, well, we probably should establish our rainy day fund finally that we've been looking to get for a long time. Or, hey, we've been evaluating this investment, let's go ahead and make it. So versus, hey, let's just straight put money in our pocket. All that said, the DOJ did have a press conference to talk about the PPP prosecutions. So thanks, Omar, for sending me that link. I did watch it live cast, and you can tell your wife that you're still safe because all of the prosecutions ultimately have boiled down to fraudulent loan documents. And by fraudulent loan documents, I'm not talking about like, hey, there was fraud because you weren't disrupted, but you said that you were going to be, but you should have known better because you were considered an essential business. I'm not talking about that. I'm talking about like applied for, 100 freaking million in funding when I've only got a $2 million business type of fraud. And it was generally, two categories of prosecutions. Category number one was the, flat out, I'm normally a criminally, or I'm normally the type of person that's always trying to get one over on somebody, but I otherwise do have legitimate business. But I'm always running, side hustles. That's category number one that was prosecuted. That's the Lamborghini guy in Florida. Category number two was the freaking mob and organized crime that put in a very methodical system of defrauding the government through the use of shell organizations. So, it just goes back to, yeah, there have been fraud prosecutions, but don't like lose a minute's freaking sleep over that unless you're one of those two categories of people on this call, which hopefully you're not. Because they're not talking about fraud related to, well, I just didn't know what was going to happen, but maybe with the benefit of hindsight, I could have. It's literally just flat out freaking straight up stone cold, good old fashioned loan fraud. So those are my two items.
Yeah, there's an interesting article on NBC New York where a New Jersey attorney was indicted with defrauding $9 million in COVID relief scheme. About $1 million home with it. I mean, come on.
Yeah, and he didn't have, like, I'm guessing that he did not have a business that could support the $9 million loan in the first place, and then just used it to buy the home. Instead, he falsified documents. I mean, I guarantee that's what happened.
Yeah. So, Jack, you've had plenty of time to do some quick reading. Any thoughts before we go to some of the questions? And we got questions rolling in, and we've got to deal with this first one. So go ahead.
Sure. So a couple of things. First, yes, if you can guess where I am at, you win a prize, undetermined at this point. But
pre-operating agreements for all my friends.
Yeah, not that much. And I don't know why I feel compelled to try to out-nerd you, but here we are. So, and I didn't even wear command yellow from old school shirt. I was just trying to bring sunshine to people because it's so dreary outside. So a couple of things. One is, I keep getting questions about, and we've answered these numerous times about the process, from A to Z. And there is a document out there that's published by the SBA. It was published, I think, on August 10th. And I think it was a slideshow, so it may have been presented at some point, but it goes through from A to Z, from beginning to end, and has responsive answers to a lot of the questions, like a kind of its own little FAQ built into it, and talks about the safe harbors and talks about calculations and things like that. I think it's like 40 or 50 slides long. And so maybe we can publish that to you guys, and it'll be a good kind of backstop to, once you, hopefully many of you have gone through the process already, know your numbers, but it's kind of like just another gut check to go through that process with those slides. Now, keep in mind, there's been a couple things that have happened since then. One of those in particular is the whole rent versus mortgage interest, and is it qualifying? Can you spend it on it, and is that forgivable, essentially forgivable expense on the loan? So keep in mind that there has been a few things in the interim since that publication came out. But on the other topic, as far as what is out there in place, there is it's interesting. So there is this really fancy organization out there called the Problem Solvers Caucus, and it is essentially a bipartisan group in the House of Representatives. 50, I think it's 50 members now, equally divided between Republicans and Democrats, and they're supposed to foster bipartisan cooperation to solve problems that were within the legislature. And of course, this is at the forefront. And so they've come together and put stuff out there. Obviously, a little bit self-serving because you're on this 50-person committee, and then you say, hey, look, we put this out there, citizens, and not our problem. Please re-elect us, and we'll continue to pursue this. So it's a little bit self-serving in that respect. But what they did was, again, the numbers pushing and pulling back and forth to each other. The Democrats are at 2.2 trillion. They were initially at 3.7 trillion. GOP is at 500 billion. And so they're trying to find a way to work this out. As we discussed previously, there's a lot of other stuff in there, and I'll give you some more examples. And this is part of the problem why, if it was just focused on getting money into people's pockets, then that would be one thing. But then you have to deal with funding local governments, state governments, childcare. So 100 billion for K through 12 schools, 30 billion for higher education, 15 billion for childcare providers, 45 billion in Medicare loan forgiveness, 30 billion to expand telehealth services, 25 billion for testing and contact tracing. So you have all these important but tangential potential expenditures related to COVID, but not directly related to getting money into employers and employees' pockets. So you have all this stuff going around that is part of it and has to be resolved. So there's multiple points of contention in this legislation. So that's really kind of the few things that I had to share with the group.
Awesome. Thank you. Also, just so you know, and we'll get into this in a little bit, Jack had sent to Adam and myself a pretty good document from the SBA, and we will get that hung up on our website and make that available for anybody. But Mitch, thank you. Yes, you can call Jack Sunshine, but I would prefer that you call him Sunshine Esquire, just to be respectful. So here's the first scenario, and a big shout out to Corinne in Oregon. She reached out to me on Instagram of all things, and she's been enjoying our webinar for a long time. And this is kind of funny. So she said she's never been to North Carolina, but when she comes, she's going to do a throwdown with us and wants to enjoy some clean juice. So I sent her to our clean juice friends. I sent her the closest clean juice location near her, which is not all that far. So that's a good thing. What's interesting is, and I'm not going to go into all the detail that she's got here, but it's really interesting. I think this will be of maybe have some application to anybody else. So here's the deal. She's getting interested in getting into some nitty-gritty details about what they need to do to prepare paperwork in order to be able to argue or defend the safe harbor exception for their FTE number. She thinks that it'll officially end up around 30 or 31 out of 52. They're an event service that works with big venues, Olympics, etc. But due to COVID, they had to downsize considerably. They closed their LA branch, and they're now closing their New York branch, keeping remote employees, had to lay off about 40% of their staff because the industry is not coming back anytime soon. They don't think waiting till December is going to make any difference. My quick calcs should hit the dollar value in our PPP loan in the 24-week period with staff. We have left just in wages. And if the calcs are not on, they'll definitely hit it after rent and utilities. The banker is asking that they have proof that the state or CDC mandated business would not be able to operate in order to qualify for the FTE safe harbor exemption. Wondering what this proof needs to look like. do you think it would be safe for them to write a document that specifies the basic facts of their company, which she gave us a very detailed background, and that they're restricted from operating at the levels which are accustomed due to restrictions of gatherings of people, basically no sporting events with spectators? Or will they need just good documentation from their customers stating they had to cancel or postpone events? She wants to know if she's overthinking this. You know, is this just going to be a check the box, yes or no, related to COVID? Where we were able to operate our business at 100% of last year's levels and not be able to provide P&L for each period. You know, basically they went from 21 million top line down to they're projecting as low as 1.5 million going forward. So Adam, do you want to talk about that specifically?
Yeah. So I think our guidance is pretty simple. What you're going to have to get are signed third-party sworn affidavits from your customers that otherwise holds them liable for their pro rata share for the repayment of the loan. If for some reason the bank decides not, I'm just teasing. I'm absolutely teasing with that. So I'm going to stop talking right now. Yeah. Yeah, you guys can't see Jack, but he's got his face covered, thinking, okay, did I get disbarred for that
red
lesson?
for you. I'm turning red. You see the red, and I'm trying not to be yellow, but yes.
Yeah. No, I'm actually happy with this question because it actually gives us the conundrum of traceability and how you can spin yourself around the axle. And I felt like it was pretty relevant because, you know, I have had, you know, we have a few clients in a related business. So Rebecca, if you're on, you know, hey, but we do have a few clients that are in either the same or related business, not knowing exactly what you do, that have had the same problem. So if you kind of go to, well, black and white, you know, did the, you know, CDC or the state of North Carolina, no, you're not in North Carolina, but I'm going to use them as an example because I know the politicians, did Roy Cooper issue, you know, an order saying that professional services firms that are in event management need to shut down? No, he didn't. You know, absolutely not. But what did he do? You know, what they did do is they restricted gatherings of people. You know, they did shut down venues that you would have otherwise hosted things at. So I just feel like in this particular case, you know, ultimately it's going to be up to your bank to say, yes, the documentation is good or it's not good. And of course, there's been no definitive guidance of what Exhibit A looks like. But what I feel, you know, is a fair, you know, narrative would be, you know, this kind of the business that we're in. You've almost kind of outlined this, but this is the kind of business that we're in. And, you know, on this date, you know, this order was issued. You know, that effectively meant that we could not service events of this size, and that represented, you know, X% of our revenue last year. So you're already like, you're establishing the case of, you know, gatherings of over 50 people, you know, represented, you know, 75% of our revenue. That'd be, you know, kind of path one is restricted the venue size. Path number two would be the travel. You know, the CDC issued guidance saying that, you know, companies should consider reducing or eliminating non-essential travel. Well, what are you? You're non-essential travel. So again, there's no like, hey, direct line to your specific issue. But if you can't find a venue to host an event, A, and B, the companies aren't going to have the events anyway because they've eliminated all travel, you're at where you're at. So I would say that is traceable back to, now is that any guarantee that it's going to pass? No, it's not. But to me, that's traceable back to, you know, government and CDC specific orders or guidance that led to your revenue downturn? And then you kind of go back to, well, look, if I was standing before the judge and a jury of my peers and I said, hey, I applied for forgiveness because our revenue is really down, so I didn't have the positions to hire the caterers, the ticket takers, the security guards, because we were in the business of running events. I'm pretty freaking confident that jury or your peers would say, oh, I totally get it. Yeah, there haven't been events. Versus, well, no, by letter of the law, Governor Cooper didn't say you couldn't have events. He just said you couldn't have gatherings of over 50 people. So you could have gone after events of 10 or less people and otherwise maintain your revenue stream. So I feel like you're in pretty good standing on that one. And I would have thought just a narrative, with kind of the specific, I think Jack in an earlier call had said, look, if you've got specifics, do that. If you've got timeframes, do that. Like in this case, it would be pretty easy to do a narrative of, what happened in the jurisdictions that you're in with respect to pronouncements on elimination of non-essential travel and prohibition on gatherings of people. But we're using this specific to the event management business, but I think this pretty well applies to, just about everybody else in terms of demonstrating the relationship between, okay, I'm not a gym, but I was impacted. And by using gym as the example, that was called out, couldn't open in North Carolina until phase 2.5. In a real capacity, and even now you're at 30%. But there are a lot of ancillary businesses that are associated with that. Like, what if I had a personal training company? Not specifically called out, but I'm screwed because I don't have a location to go train people at. That's the kind of I think that's what we're talking about in terms of establishing the traceability.
But there's an interesting. Yeah, there's an interesting caveat to that too, or just kind of side story, which is that what happens with the companies who were able to rapidly expand or adapt by doing something differently. So they readily adapted to, spent the money, sometimes spent a lot of money going further into electronic commerce, electronic delivery of goods and services, and have this ramp up of expenses. So, and the reason why I bring that up is because in the skinny down bill and other things that I've seen, there was discussion about COVID related expenses that are beyond what was originally in there in relation to, that 40%. So I think that also is an interesting question, because there will be businesses, I think, out there that will not be able to demonstrate necessarily the decline in revenue that would have otherwise occurred if they had not spent the money to adapt to a new way of doing business. And so I think that's also to be seen as to how that is handled. And I think it would be fair to say that, spending PPP money, maybe round two money, I think it's fair game to say, well, part of the non-payroll expenses should be related to, or can be related to, and are subject to forgiveness if you use them to maintain your business under a new operations model and methods. But that's Jack theory.
Jack theories are pretty good, but not legal advice. So, all right, first question here on the screen from Bob is, our PPP money hit our account on 4/17. So at this point, should we simply wait until after 10/17 or 26 weeks to reapply? We'll make the number at 8 weeks, but we'll be well over by 26 weeks.
I mean, again, same guidance as before. You're not going to get a gold star for applying early, so I would just wait, because you got a 10-month window after that to go and apply for forgiveness.
All right, next question is up from David. Got a question on owner's wage calculation. Owner receives wages, but the company runs at a net loss in 2019. Are his 2019 earnings the net of those two things, or does his 2019 wage or W-2 income count as the basis for the 2020 wage?
On the assumption that this is an S corporation or a C corporation, it'd be the W-2 wage. If it was an LLC taxed as a partnership or a C or a Schedule C, he shouldn't have had a wage in the first place, but you could have used the W-2. So on the assumption it's an S corp or a C corporation, it'd be the W-2, not the loss associated with it.
All right. No other questions in the queue. So if you've got questions, hit us up. Thanks again for the fun chat about Jack being nicknamed Sunshine Esquire. Anything else out there from the gallery? Speak now or wait until next week.
So
Bill?
Go ahead. Go ahead.
Oh, I was going to say, I think, unrelated to PPP, but related to, general business, another thing that I've been surveying our clients on is just, what are the thoughts around going back to the office? Because that's something that we're talking about at BGW as well. And I think that, the general, nobody has an answer on that, but the general, groupings or clusterings that I'm seeing is that, look, if I had a business where I had, people that had to be there versus people that didn't have to be there, the challenge that I need to overcome is the one of fairness, or creating to, like, well, look, if I have to be there, like, why is it that Timmy, even if Timmy doesn't have any good reason not to be here, just is electing to be at home because he can, why doesn't he have to be in the office if I have to be out in the field? This would apply to like construction company and letting the HQ people work from home, but you've still got the guys out in the field. You just got to be aware of, am I creating two classes of citizenship? At that point, just to think through, kind of the other thing I think people are thinking through is, what's really being lost, from a culture standpoint. So it's like, we're still getting work done, but is it because we're a bicycle rolling down a hill and there's about to be a big uphill and we should start to consider shifting gears and pedaling to prepare for that? Or alternatively, we're just going to keep on coasting and then all of a sudden face the uphill and say, oh shit, we're in the highest gear possible and we should have been pedaling, way back then. So I think that's kind of another consideration, which, I probably would put BGW in that camp. So I think, at least for me, the clarifying thought that I'd encourage everybody to think through that's, sitting on the call is that, did you ever plan to be a virtual company or not? And that's sort of guiding question number one is, look, if you didn't set out to be a virtual company, sure, it's great to have a flexible policy, but I'd craft a flexible policy, not we're suddenly going to be a virtual company because we can. Instead, just craft, if we want to give people this type of flexibility on a more permanent basis, what should that policy be? Just kind of thought number one there. And then, the second is, at some point, you can't keep on ducking this question. You got to draw a line in the sand. We're starting to see that in larger corporations, where, the traders being ordered back to the floor, the sales force, being brought back. So just, I think it's time to start really, even if you haven't made a decision, picking the date to make the decision, I think would be a good step for a lot of people that are out there.
So here's a follow-up to Bob's question. As a follow-up, should everyone file at 26 weeks if they're at 26 weeks and forget the 8 weeks? This isn't a question of filing early for the Gold Star.
I think I would still like I think with BGW, we'll still use the 8-week period because that way it's a simpler forgiveness process. We're just going to delay actually doing it. So I think I'd use the 24-week period if I have to use it for the purpose of the calculation, which would imply that I've got a reduced workforce and had to do it. But if you could otherwise didn't need it, then I probably would use 8 weeks, but still just wait to apply for forgiveness.
Yeah, and I would reiterate, I think it goes back to just do the calculations both ways and see which way it ends up being better for you. And, even if, we've talked about whether you file now or wait for forgiveness, many times in the past, but I think it comes down to, even if you are ready to file, unless, it eases your mind to do so, I just see so many things that are up in the air with respect to PPP program 1. And is there going to be some sort of linkage between the two, or are they going to keep them in separate buckets? And if there's a linkage between the two, even though you're 100% in the money, 100% forgiveness, there may be something else that modifies and gives you a better benefit down the road. Again, we don't have crystal balls to be able to see that, but there's just so many unanswered questions, or questions that haven't even been raised yet. As you get through this process, you get to a certain point and then you end up with 3 forks in the road. You go to the next one, there's 3 forks. So then you have all this huge decision tree that we don't even know what the tree looks like in its entirety. So but just be mindful of that, run the calculations and see where you end up.
This is a follow-on, just a FYI from Vicky regarding the workforce and remotely. We only have 20% of our workforce working remotely. They are an essential company, but we've decided to start bringing back the 20% in 2 weeks. Those who want to come back now will be first. Eventually, all will come. Those who have children and education issues will be handled separately. So thanks for weighing in on that, Vicky. It's always good to have you on this thing. Next question, a couple from an anonymous attendee here. If you can meet forgiveness, if you can meet the forgiveness amount with payroll only, is that all you have to submit or show as long as there are no issues with the FTE? That's the first question.
Yeah, I would think so. I mean, again, I haven't seen anything on brownie points that said, hey, I spent more money than you gave me on these areas. So I would think, whatever expenses get you to the number, if it's all payroll, great. I mean, that actually was the original intent.
Yeah, that's what I was going to say. Original intent was this is to put money in people's pockets and subsidize the employer's responsibility to employ people and to pay them. So that, if you can, the original 25% and then the 40% is really just an acknowledgement that there may be situations where you can't use 100% for payroll. So that's the perspective you need to consider. So yeah, if you're 100% on payroll, then that's the way you need to go. Subject to what I just said, which is, again, is there, when you start mixing together and making the pile of money bigger, but I can't imagine that there be any reason that a reconfiguration if you're 100% on payroll with all the original set of funds. So, but I'm going off on a tangent. So yes, I mean, preferably more to payroll is what the intent of the program is.
Next question is, still no companies you know of allowing employees to defer payroll taxes?
I haven't heard of any.
I haven't heard of any. And in fact, it's like not just a no, but it's hell no. I mean, until somebody says that I'm not going to be held responsible January 1 for money that I gave to someone, to my employee at your direction and with your permission. But then you're saying, well, if they don't pay that back, or if they leave, still there's the whole issue. What happens if they leave employment and it doesn't get paid? And they haven't said that, well, in this particular instance, you, the employer, who is typically a trustee on behalf of the federal government, to collect these taxes and remit them. We're telling you, you don't have to do that, but part 2 hasn't been said, which is, and we're not going to hold you accountable like we normally would do. That, for example, and I brought this up previously, if you pay someone as an independent contractor, so you don't withhold that money, they're supposed to pay that tax in the form of self-employment tax. If they don't do that, or if you've misclassified them as an independent contractor, the feds don't care. They're like, you screwed up, you owe us the money, go get it back from your employee that you may never see again. So there's, like I said, it's not just no, it is, yeah, no, not no, no way, not at all. It's like that commercial that's on TV, you know, all the different ways of saying no with like Chandler Bing. It's like, no, 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 no.
Going with the way back reference on that one.
Yeah, most people are like, yeah, I get it. Other people on this line are probably like, what? I don't get it.
Any other questions out there? This has been a good series of questions, and from folks as far away as Oregon and locally.
Well, I just have a comment. I'm going to take Mitch's comment about sunshine as a compliment, because while we were doing this, I did some research on the etymology and research on, is it male or female? Is it derogatory? And so I'm going to say that, you know, it's kind of like an old English short complimentary term for someone whose named Sunny, nickname is Sunny. So then it gets into sunshine, versus the derogatory. And I'm trying to remember where the reference was. It may have been in Star Wars. Didn't Han Solo call Princess Leia Sunshine, or there was some movie like that. So that's not how I'm going to take it, and I'm going to take it the other way.
All right. Let's see here. Mitch, thank you. It's good to have you on here. Last call for questions. We still have a little bit of time, but we don't need to take all the time if we don't need it. Joe, good to have you on here too. Thanks, man. We will put this thing up on the BGW CPA website, or the YouTube channel, not on the website, but on the YouTube channel. And that'll be up later on this afternoon for anybody. And hopefully Corinne will be able to dial in and watch that. Any last parting thoughts from Mr. Sunshine Esquire or Adam?
All good, buddy.
All right.
Yep.
Everybody, thank you so much. Hopefully we'll have some new news next week. And if not, we'll still be back here anyway. So look us up on the BGW CPA YouTube channel later on today. This will be back up, and have a wonderful week. Thanks for everything that you do to keep this economy going and slogging in spite of what the politicians do. Have a great one, guys. Bye-bye.
All right. See you, bye.